All right, hey everybody, welcome to your free futures video. Hope everyone had a good week. This last part of the close was pretty interesting. Slow grind lower, bringing us down below 12,900, more specifically just below 13,000. The reason why I have these weekly time frames up here, both on the S&Ps and the NASDAQ, is because we didn't even close above the weekly 100. We are way below 13,000 now, and that walk down lower on the S&Ps was brutal. But what I'm looking for now from these weekly time frames is some type of stability. But considering what we have next week, we have FOMC on Wednesday. We got to get through all the major earnings that we still have for next week. This week was just big on tech. All the big multi-trillion-dollar companies out there really just reporting this week and shaking things up, but nothing really substantial sticking on the long side. And so I think it was worth just kind of going through the weekly timeframes to give you that larger perspective. Here on the right-hand side, you can see the S&Ps doing a little bit of a double bottom. Yeah, and it's taken a while to get here. Now we're looking for the lower L2, which is about 4106 if you use the quant pivot levels. We also have a micro squeeze with red 10x bars across the way. So what I'm looking at now is a continuation, or at least having the expectation that Monday through Wednesday is not going to be something that I'm going to want to step in and be a long-time buyer of. I'm waiting for after Wednesday FOMC to see if it even makes sense to be a buyer. I'm trying to take advantage of the long-term long based on some of the previous long-term wicks that we have since February and March down at these lows. So I'm trying to just see if it makes sense to be buying after Wednesday of next week, and that's we'll know then. Wednesday is big on earnings, and so is Tuesday, and so we're going to have just a major cluster of two major afternoons of reports and commentary via the FOMC to talk about another potential 0.5% rate hike. And that will be interesting because we've already had a ton of selling over the past few months. The daily chart kind of portrays that a little bit easier for you. There you go. You can see that. And now we have made a new low. This isn't even a 2022 low. This is the new 2022 low. So 12,801, and then going back to basically last April. Let me zoom out here. We'll have to use the weekly time frame one more time. Zooming out, you can see going back to March and April of 2021, the previous low from there is 12,223, or close enough, and that's another 600 points lower, from where we're at now. So could we get there? Sure. Are we already at a weekly second deviation? Yes. It's a tough call because, at some point you expect a bounce similar to something like we had back between February and March, but I don't think we're there anymore. I think this is going to continue, and we've got to get through the next rate hike. I think from there, it's a little bit more clear as to where we'll find a floor. I feel like we're attempting to find the floor now, but we also have just a crazy week ahead of us, Monday, Tuesday, Wednesday. So cautiously bullish. But really hands off, looking for maybe a continued short on Monday or Tuesday. But from there, Wednesday I'll be flat, and we'll be talking about FOMC, talking about rate hikes, and just kind of the narrative around that, and see where we're trading to see if it makes sense to come in and buy this thing. But right now, cautiously on the sidelines for Monday, Tuesday, Wednesday. The daily time frame still has a lot of red across all the indicators. It could be the 10x bars, it could be the histogram, but at least we have a fire line here at 4,095, which is my first target to the downside, but it's also my first spot where I want to entertain buying this market, if that makes sense. So slightly lower lows to try to be long for the first week or two after we get through FOMC on Wednesday. Okay, so it's a hurry up and wait until Wednesday. But that's where I'm going to be. I'll buy any more weakness that comes my way by Wednesday. If it's completely falling apart, and we're talking about this in the intraday session, whether it's futures or possibly the day trading room, we'll be talking about market internals and how negative they are. And all I mean by that is, do we have an advanced decline that's almost negative 2,000? Do we have ticks that are lower and trending negative 1,000 in a major way? Sometimes 1,100, sometimes negative 1,200. What's the VIX doing? Let's talk about UVXY next week. So there's a lot to take into the equation. I still think we're going to be in a continued bear market all the way through the next rate hike, and then from there, I think it makes sense to start entertaining the long side. But we're not there yet. It's just a hurry up and wait. I'm surprised by the slow grind lower all the way through the Friday close. But we'll see what Monday brings us, and we'll be talking about it then. If you're new, welcome. Catch me in the rooms, in the futures room at 11:30 to 12:30, and we talk about micro futures. Join me there. I look forward to seeing you. Say hi, and we'll see you in the next video.
Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.